So, good morning, active traders, and welcome to our trading week ahead. I think the final one of the year, right? It's New Year's Eve, and I wanted to wish you all the very best for a prosperous, happy, safe, and peaceful new year ahead. You all have been fantastic. I really appreciate very much you all being here for so many years. Many of you have been with me for many, many years, and I sincerely appreciate it. I hope that I can add value to your trading decision making moving forward, right? There's so much money to be made out there, but also so much to be lost. Speaking from both sides of experience, and it's my job, it's my responsibility to teach you the difference between what I've found that works more consistently versus everything else. For example, the market usually pivots at 10 o'clock in the morning. That's look at the S&P chart for the last year. Every single morning, 10 o'clock, give or take a few minutes. If it's been going up, it goes down. If it goes down, it goes up. Things that are consistent like that are things that I teach in the live room and elsewhere. So anyway, I'm very grateful to all of you for being here. Oh, thanks, Phil saying thanks for the open house. Hey, Happy New Year's to you too. A lot of you saying 10 by 10. All right, I appreciate it. Hey, Silver, how you doing, man? I like silver and gold. Anyway, so what's moving forward in the market? We're still in a bear market, so we still want to be slightly bearish biased, but now moving into the new year, January is going to be an especially good time to do some very selective bottom fishing, especially on some of the high multiple techs that have sold off and are starting to bounce. A good example, for example, Tesla may be good for a pivot. I'm calling Tesla long. Now, one of my smart traders, I'd never heard of this before, but there's a ETF that mimics Tesla called TSLL, I believe it was. Is that right? Kind of these interesting new objects. Yeah, see? So instead of spending $100 on Tesla stock, you can buy TSLL, Tango Sierra Lima Lima, a TSLL, and that gives you exposure to Tesla, but at a fraction of the price and the same volatility or close to the same volatility. So this may be good for a pivot. So my message to you is we always want to keep an eye on the S&P, the VIX, and now we want to start doing some selective bottom fishing as well as inverse plays as the market keeps going down. Hey, good point from Wendy. You know, one thing that I may be trading on in January is instead of UVXY for wash sale rules. Remember, I went all cash last night. Remember, with wash sale, from best that I can understand, and again, this is not tax advice, but from what I understand, as long as you don't trade anything that you traded in December throughout the entire month of January, you won't have this phantom income from wash sale problem that often is a accounting nightmare if you don't have it handled properly. So basically, I'm not going to trade anything that I traded in the entire month of December until at least 30 days later. So February 1st, I'll go back to UVXY. I don't know that if these are substantially similar or not, but UVIX is a good kind of surrogate, and VIXI too, for that matter. Alternatives to UVXY are VIXI, VIXY, and I like UVIX better, I think, because the range is spectacular. Anyway, if volatility comes back, which I expect it will in January, do be on the lookout for some of the, not only the VIX ETNs and ETFs to bounce, but also some of our classic favorites like SOXS and SQs. Okay, anyway, let's take a look at the broad market and our VIX, and then we'll develop a trading strategy and share some thoughts. If any of you have tickers you'd like me to pull up, go ahead and start posting them, and SVXY is the inverse UVXY. So if you want to short UVXY, I wouldn't down here. I think it's overdue for a bounce. But yeah, let me know any tickers you guys want me to pull up, and we'll do those in just a minute. Thanks. Right. Yeah. The only problem with SVXY is it's the volume and the volatility are both not very good. I'd love it though if there was something that was high volume and high volatility equivalent of SVXY. That's a quick question. There's been so many new ETFs issued. Does anyone know a ETF that's identical or similar to SVXY? Apple. I think Tesla's due for a bounce. That's my oversold large cap call of the week. Tesla or the TSLL is what I'm going to trade. on a pivot. Disney and Moderna. Apple, RIVN. Okay, thanks for the tickers. We'll come back to this and get some more later too. But thanks. Anyway, let's take a look at the market. So what's going on with that S&P? We're still in a directional downtrend. Big picture, if you look at the 1-year chart, we're still in a descending channel. So we don't want to aggressively go long until, or unless, I think the market may bounce at some point in the next few months. But I want to see the market get back over that 4,100, whatever the previous swing high pivot is. Still quite a few handles up, but if our S&P gets over 4,100, that would be a long signal and holds for at least 3 days. Okay, we don't want to fish around for bottoms here just yet. And the reason is our VIX is still holding steady here. Now, VIX support and resistance is really important to look at. We had a bearish engulfment on that pivot there. Support is at 19, resistance at the 26. So 19 to 26, a pretty wide channel. Granted, if we kind of zoom in on that, you'll see the VIX has still been down. We're going to go long the market if the VIX gets under 19. So that's an important data point. I will be looking for long plays if aggressively swing trading long stock plays if and only if the VIX gets under 19, which is a bullish, it's an inversely related instrument. So the Cboe Volatility Index, as you may know, if it goes down, the market's going up and vice versa. So if the VIX gets under 19, that would be bullish for the stock market. And at that point, the market will likely be breaking that 4,100 and will be clear to engage with long stock plays. But in the meantime, we want to be very selective about what we trade, because there are isolated charts that are going up great, which is good. They're beating the market, but you want to be selective in this kind of market environment. So anyway, and if the VIX spikes, gets over the 24, then the 26, and goes up, then we want to play inverses on the market drop. Now let's take a look at some of the charts we had earlier. And these are mostly from you folks, and you guys had so many brilliant charts. Take a look at these charts. Take note of those tickers. VIPS looks good. TME, also really good chart. 9 looks fantastic. Look at that chart, right? Even though the market's been going down, these charts have been going up. So that's what you want to play, relative strength plays in a down market, especially ones with large green candles like this. So 9 looks good. VKTX, and these, I think these are all from you folks. So thank you from the last several weeks. So many smart traders are around. A huge turnout. I'm frankly surprised and a bit touched and honored that so many of you are here on New Year's Eve. What are you guys doing? You should be out partying, right? Party. New Year's Eve and a really big turnout here, hundreds of you. Well, thank you all for being here. Anyway, let's take a look at what's in play. But first, let me do a quick commercial announcement. Kind of a Christmas countdown special. This is a post-Christmas, early New Year's special. You can get a whole year of me in the live room. If you could take it 5 days a week, we meet 8:30 till 11 or later if the market's running, and 3:30 to 4, and also anytime the Fed is meeting at 2 o'clock or whatnot. So lots of coverage, 5 days a week. And you can give me charts of your choice, as well as all the ones that I pick with specific entries and real-time entry and exit calls. So my live trading room experience is done on Zoom, just like this, with live stock chart and ETF chart entry signals, specific prices to use to paper trade, and live real-time exits and re-entries for second chances. If you miss the first breakout, there's undoubtedly a second opportunity for most charts, and I give you those as well. So you can join me for an entire year. Give yourself, and by the way, today's the day to order, because you can possibly write it off as a tax deduction. You have to check with your CPA, but you may be able to write this off as a tax deduction if you order today for next year. Today's the deadline. It's the end of the year today. It's the last day of 2022. So it's just $9.97 for a whole year, which is a really good bargain. It's like $80 a month, right? Or $86 a month. And I've got so many hundreds of traders as members. We've had a really big turnout. And thank you to all of you who've been registering this past week. We had a lot of new folks on board. So look forward to seeing you. And for those of you who were in the open house this past week, you saw how many winning alerts and the specific reasons why the alerts were set, so that I teach you with examples and trade a lot of these myself in my live Fidelity account as well in the background as we're doing our charts as well. So do join me. It's at trademastery.com/holiday. Okay, now back to the charts. You guys tell me, what's one thing you like best about this chart? CBAY is the ticker. Charlie Bravo Alpha Y. What's the pattern that you see? Look at some other charts here in just a second, Lee. I'm typing in the link here for your reference for that holiday special. Yeah, Robert saying up channel with a good range, right? Range is everything, right? You're right, man. Steady green candles, right? Cup and handle in early December, good. Bigger candles, right? Uptrend, higher highs and lower lows. Volume, range, parabolic volume. High volume, thanks. Oh, so many comments. High volume on big up, yeah. All valid comments. Good comments. Look at another quick tip, and some of you got at this, is look at two things. Well, three things, but two things especially. The most important thing is the trading range of the chart. On the right side, that's the most important part of the chart, is the math, the numbers, the size of the range. That's number one criteria for whether or not I'm going to trade something. The other is lots of green candles in an uptrend that are getting larger, right? By and large, you can see the candles are itty bitty candles over here and over here. Got a surge here and then slow candles, then it's starting to light up again. Now this is a signal that I want you guys to learn. Okay, this is a really good signal that I use in the live room to teach traders with winning alerts daily. And it's one of my favorite patterns. I want you guys to memorize this pattern. Here it is, small followed by large. So when you see a small candle in an uptrend followed by a larger candle, especially on higher volume like we see here, it's often good for a winning trade where you can potentially make a lot of money like you could have had you traded that pattern every single time it occurred here. I'm one of the old school pattern day traders. I first started day trading back in the late 90s. I founded my day trading university back in 99. I was the first university site for active traders. And one of the things that I've trained so many tens of thousands of traders in is the patterns that repeat themselves for both day and swing trades. Now we're looking at swing trades. We're going to look at day trading 1 minute charts in just a few minutes. But anyway, memorize this pattern, small followed by large over body, and that's a consistent pattern that I love. It's a really good momentum pattern, and it gets at what some of you folks had mentioned about large green candles on the way up. So that's the signal. You go long above the second candle, 20, 30 cents above the second candle on a breakout. Okay, let's look at some other charts. TSLS doing a pullback. Now these are your guys' charts coming up right now. I'll tell you whether or not I trade it. Beautiful chart. Thanks for PDSB. That's now. What's one thing that I don't like about the candles though? Given what I just told you, what's one thing that I would still trade this because price action is everything and price is going up, but bulls are running, as my colleague Steve would say, Steve Nissen would say, bulls are running out of steam. How can you tell that? Right, William got it. Shrinking candles. Mira, hey, Mira always gets it right. Thanks, Mira. Happy New Year, Mira. Candles are getting smaller. Higher highs and lower lows. Right, so the candles are shrinking. The incredible shrinking candles. They're getting smaller and smaller. It's like a logarithmic curve that may go down. So I would still hit it over 14, but the adjustment that I would make as a professional trader is lighter share size. Whenever you have a price action is everything, okay? Remember that. If it's going up, we buy. But if there's a red warning flag, warning, you don't not trade it, but you do smaller share size than you otherwise would because there's a contrary indicator to the price action. Price action is dominant, so you still trade it, but lighter share size. That's one professional tip that, from one trader to another, I'll tell you, makes a big difference, at least in my own personal P&L, is I trade larger share size with strongest patterns, smaller share size with okay patterns that are still good, and just have two different numbers. I want you to have two numbers in mind. If all green lights, it all lights up, and it's a really good chart, that's larger share size. What size is that for you? And if there's a good pattern, but there's a red flag embedded in it, what's a smaller share size? Maybe something like 50 versus 200 shares, or 20 shares versus 100 shares. Or if you're an experienced trader, maybe 300 versus 1,000. Whatever, you have a small size and a larger size, and you adjust your trading Don't overthink it, make it too complicated. Just make it simple. If it looks good, but you're a little leery, small size. If it looks great, large size, okay? So my institutional clients, when you hear the size that these guys trade, it's incredible. Anyway, VRNA, that's a good chart. That'll play. It's a gap continuation. That looks healthy, north of 27. TQs looks terrible. Let's see, XLE looks terrible. Apple really sucks. It's short the 125. Disney, no Magic Kingdom here. It would be a fade under 62, right? I'd short the 62. So that sucks. Moderna sucks. Big pullback. Why would I touch it? RIV in. It may take a shot at a bounce over 20 because the range is okay, but it still sucks unless it comes back to life and climbs over the 20. Kilroy was here, 20, but down here it'd be a fade to 17. The dominant trade would be short under 17, long over 20. That's one thing you want to do too, is establish a box trading range. And now most of us, or at least I don't like to overnight short, because who knows if it gaps up, I don't want to risk that. So I don't do that, but you at least want to put a support and a resistance level about the current price action of an instrument you're considering. So, maybe a bounce over the 20. But I think my favorite chart is this 9 chart, right? That one looks really good. Okay, now let's take a look at some intraday charts for you guys. And these are really interesting. Let me ask a quick question. How many of you just day trade? How many of you are trading Kala? Our live room members love this. We call it one of my smartest traders I ever met in my life. Mick called this thing back at like $6 a share, and I called it, and he said it's going up, and I gave my traders a long trigger. I think it was like 680, and it ran to 40. Right? Anyone trading Kala? It got halted a lot, of course, but big range. Really wide range on this. It had been down at like under 6 a few days ago. I'm not going to pull up the 3 or 4 day chart, but had been much lower. Kala, boom, to infinity and beyond. Dun, 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 dun. Bye, bye, bye. Now this kind of chart would be terrible for swing trading because the range is extreme. It's wonderful for intraday trading for experienced traders only who know how to work with halts and small share positions and wide spreads and all kind of stuff. But this would be completely unsuitable for swing trading because the range is extreme. That's one thing that I want to teach you guys too. My lessons. I don't like the word teach. It's more like from one friend to another. Share my lessons learned in trading millions of dollars worth of stocks. Lots and lots of stop losses and costs, as well as lots of wins. The difference between the wins and stops is where I add value. Risk is this is extreme risk. It could gap down to 16. You could cut your money in half. So it could gap. By the way, when you're evaluating a swing trading chart for an overnight hold, believe that the 2-day low is the maximum risk, unless it's an earnings miss or a news play or something. But typically, from a price elasticity standpoint, your maximum risk on the trade would be a 2-day low. Now that's way unacceptable on this. At $14 a share, I'm sure as heck not going to be 38. Maybe worst case it opens at 14 or 16. You take a bath. So this would be a completely unsuitable chart for swing trading. Oh yeah, cannabis is up lately, so you might want to try Canopy and Tilray. And Tesla is starting to bounce. So Tesla is okay for a swing, I think. Apple not so much. Good for day trading though. We made good calls. What was it, 128.40? That was my day trading call for my members. Yesterday was 128.4 on this. Poly was a nice little runner. For a cheapie, ran all up to from 4 to 8, so it doubled in value from $4 a share to 8. And good price elasticity in some of these other charts as well, like Futu. I nailed the bounce on this. I called the long for my traders at 44.6, and I said to sell. By the way, the most important part about the alert yesterday, in this one, I called the long at 4 before it got there. I said pre-market. I said let's look for a long if this guy breaks over 44.6, It did, and it ran up. The more important thing is I told everyone, if you're paper trading this long, we'd sell it at around 47.5, I believe, 47.4. Yeah, 47.4 was the exit call. So I not only give you entry calls, but I also give you live real-time exits, which is more valuable because a lot of charts, right, they go up and they go down. If you go up and you don't know how to get out and it goes down, that's not good. You want to go up and get out while you're in the money. So anyway, that was a good call, a good round trip. Focus on your exits. I think you can become a better trader, at least if your experience has been like mine, if you focus on your exits in live markets. Let's see. Let me put a different background up here for you and we'll continue on. Hit me with your tickers, guys. Oh, wow, a lot of them. Okay. My trader's background. Boom, like magic. Behold, psh, blink, blink. Bum, bum, ba-dum, ba-dum, bum. Okay, hit me up with your tickers for swings. Let me go ahead and pull up the swing chart, the daily, and we will continue on with your folks' picks. So I hope that helps. Just a reminder, do be sure to join my live room. Today is the deadline, and also it may be a tax deductible thing depending on your situation as an educational expense, right? So you can write, you may be able to even write this off, but you want to get that order in today because today's the offer deadline and also deadline to write it off for next year's taxes. So anyway, if that's applicable to you. So you can join my live room for a whole year for just $9.97. That's a really good value. It's like works out like $86 a month. So for less than the price of a Starbucks coffee day, you get my top picks, real-time entries and exits, and the picks from my smart members like Mick and others who are really good with their calls too. So do join. It's at trademastery.com/holiday. Okay, now let's get back to our charts and we will resume. Wow, a lot of tickers. I'm going to enter these and then I will go through them one at a time for you guys. And if I missed your ticker, repost it, okay? They're scrolling by. There's so many of you here. Wow, hundreds. I'm really honored, and thank you all for being here on New Year's Eve. It's my honor that I'm very flattered that you guys would be here on New Year's Eve. So thank you. I appreciate it. I hope I add value. And I'm somewhat entertaining too with the horn. Something to, hoo-yah! Never heard of it, but that's a good ticker. ARDX. Hey, Happy New Year. You too, Tony. I used to know Tony Oz. He's a good guy. By the way, be sure to get Tony's book, The Stock Trader, and he's got 2 books, and Stock Trading Wizard. Tony Oz, great guy, really smart guy. He's a really good trader. He was a really good trader. I haven't talked to Tony in many, many years. We used to talk on the phone back when I lived in Hawaii. But Tony Oz, The Stock Trader, that's one of only like 5 books I brought with me here to Colorado when I moved here from Hawaii. The other being Steve Nissen's Beyond Candlesticks, and I think Disciplined Trader by Douglas, and some chart pattern one by Volkowski, and that was it. And Tony Oz's The Stock Trader, really good book. He kind of goes through he won some trading championship and he goes through every single trade and the setups and really good insights that are still valid today, which is good. Oh yeah, and Tony Turner, my colleague Tony Turner, she's a great lady. She's really knowledgeable. She's the one who exposed me to ETFs, and now that's what I trade dominantly. Anyway, Tony Turner's Beginner's Guide to Day Trading Online was my first ever Amazon review I wrote, and it's still a great book. Anyway, SRPT, Sarepta. Give me your guys' tickers and I'll get through every single one of them. I'll tell you, and again, don't be offended if I say the chart sucks. I'm not saying you suck. I'm saying the chart sucks. You're smart and to be honored for bringing the chart to my attention, so thank you. But if the chart sucks, the chart sucks, in my humble opinion. Based on the range, the volatility, the trend. Again, why would you trade anything that doesn't look like this or this? I think CBay was a great chart too, right? Yeah, that's a wonderful chart. Those are charts that do well, or at least it did do well. Okay, let's see. Until it doesn't, right? Happy New Year's, one and all. SMCI. Yeah, I think I've got these all. IQ. Okay, let me go through these. And if I missed any tickers, let me know. So the 2 things that I look at when I evaluate a chart, the first thing my eye goes to is not the stuff on the left. Because what if the range on this was, say, $40 on the low and $41 at the high? I wouldn't trade it because there's not enough profit potential. So my eye first goes to the right side of the chart and evaluates the range. 34 to 46, that's okay. It's a good solid chart. This would be kind of like a bunny slope chart for beginners, and it looks fine. It looks like it's a nice idea, like a B minus. It's not a rock star chart, but it's tradable, so it doesn't suck. So it would be worth a trade. This, by the way, this kind of chart is one that if you're a newer trader, you may want to look at because there's not extreme range, right? You would not want to day trade or swing trade something like the KALA chart that's at a $20 range. So it's okay. It's a good, decent chart. SLV, also healthy chart. I don't like all the gaps though, so I wouldn't trade it because of all the size of the gaps. GB, that's a good steady uptrend. I don't have any objection to it. It's, again, these, how to say, the size of the gaps is one thing I'm not comfortable with. I prefer charts with so much volume that there's virtually no gaps. That's okay. Let's see, Tusk. Yeah, that one's actually okay. Now this one illustrates a cardinal rule for swing trading. You may have seen my article on stocks and commodities. Oh, by the way, I'd really sincerely appreciate it if you guys would vote for me in the stocks and commodities readers poll. Today's the deadline, December 31st. Traders.com for all of you who are fellow subscribers. And I'm an author. I write the Trading on Momentum column for years now. It's my goal to kind of fill the big footsteps left by the great former columnist who was there before, Bright, Don Bright, who unfortunately passed away. Don Bright had a brilliant column on direct access trading. He was the most knowledgeable guy I know about DAT, and he passed away, unfortunately. So I volunteered to be a columnist, and I've been there ever since. So if you would please vote for me at the Traders. I don't have a link for you, I'm sorry, but Traders.com. Go to www.traders.com if you are a subscriber to Technical Analysis of Stocks and Commodities magazine. And I'd appreciate it if you'd vote for me, either for one of my articles or for me as an educator. It'd mean a lot. So thanks. If what I've done for you has been of some value, I would appreciate if you could reciprocate by hopefully voting for me. Anyway, Tusk, it's okay. Anyway, one of my cardinal rules is don't buy nines. So I wouldn't trade this until it gets over 10 at some point in the future. Because the 9 to the whole number is often a choppy pullback or exit target region for people who've been in from earlier. So, yeah, XSM range is good, but trend is not. So nope, it's just sideways for a long time. SMCI, nope. Hoo-yah! That's okay. That'll play. That'll play. It's going up. It doubled. And by the way, that's another quick tip. If on the right side of the chart, you can see it doubled in value sometime within the last 90 days, that's usually a good indicator. So $1.60 to 4, yeah, over 460 or so. Not a recommendation, but hoo-yah, that'll play. That's good. ARDX, yeah, that's good for cheapie. It doubled to over doubled. That's a really good chart. I like that one better. ARDX, thanks. That's a good one. I'd hit that over 3, right? 310 or so. Sarepta, nope. Range isn't good enough. It's only got a $30 range for a $100 instrument. I like that it's in an uptrend, but that would be tough for me to trade without getting shaken out. And the return on investment for a dollar leverage standpoint isn't there. So, no. GGB, now that really sucks. Okay. I would never trade that in a million years. IQ, that's a good chart. Okay, so you guys are doing good. So you're batting around 60%. I used to be a statistician for Ford, and it was a great company. I like Ford. Anyway, the new EV, F-150 Lightning, may be a bestseller in the world. Let's see what else. Any other tickers? I think that's about it. Okay. Well, thank you, folks, for being here. I appreciate it. Let me run through these just really briefly one more time. Just really, and the purpose for me doing this is to help imprint upon your consciousness so that you memorize, hopefully, winning chart patterns and what tradable instruments look like, so you get a real clear understanding of how to pass, kind of like putting a filter on something. Which of all the charts out there, which are the few that'll pass your visual examination of something that's actually worth trading, right? We had so many good alerts and charts this year for you guys, so many big wins if you took them. So I thank you for being here. So that's good. TME 9 looks great. VKTX. And if I were to narrow the list, let's see, we'll get rid of that one. Which one had the pullback? That one. So that was fired. That one's just recent on the breakout. That one's, so let's say if I were to narrow the list, again, as an active trader, that's one thing you want to do is narrow your list down to the best of the best and brightest of the list. And you really want to get to a place where you're in a list of less than 10 instruments. Those two have gone up, it went sideways. Okay, so in rank order, of all, what I'm trying to do is get down to like 2 or 3 charts. They're all really good. That one makes muster. That one's good, but not great. That one's good, but not great. That one's great. Okay, so I'll make the Rockstar list. My top. Does that help if I narrow all these charts down like 2 or 3? The very, very best of the best. That's what I like to do when I trade. Is I like to focus on a few charts that actually have the very best potential for breakout runs. That'll continue. That one's pretty hot. That one's really good. IQ. I like IQ and ARDX. Okay. So those would be my top 3 picks. Would be CBAY, IQ, and ARDX. They have the finest charts. And the more experience you get as a trader, the more you know the difference between the subtleties of charts that are likely to continue up versus anything that looks good but not great. So these are all really great charts, but the CBAY, IQ, and ARDX are exceptionally strong. So, and that's because they don't have, like that one was kind of sideways. These have good, strong momentum that looks really exceptional. Yeah, those are the 3 best charts. Does that make sense? I hope that it does. Those are the charts with the best momentum and the best directional volatility. So good stuff. All right, thanks. All right, thanks everybody. Yeah, appreciate it. All right. Well, you guys have been great. Thank you so much for being here with me. Do be sure to register if you'd like to learn with me. And you have my word, I work extremely hard for my traders. Even like these free events, you see how much work I put on these free events. I put a lot more even into my for pay event. So happy New Year to all of you. Be safe out there. Have some peace of mind. Resolve to do things better next year. I know I am. I'm going to trade less. I'm going to trade less frequently. I'm going to trade more carefully. And one of the biggest changes I'm going to make this upcoming year is more intraday swing trading. That's where you buy the open, sell the close. So instead of trying to dink around with the ups and downs, I'm going to put on a trade in the morning, put a hard stop right under support, and then walk away. And at the end of the day, either I got stopped out or it's up. And I'll see, well, maybe if I'm really anal about it, I'll double check at lunchtime to see if we get a lunchtime reversal. But for the most part, I want to buy the open, sell the close. And that's going to be a core strategy that we'll be covering in the live room, in addition to the 5-minute round trip scalps and all that. So for gappers and 2-day high breakouts. So anyway, have a wonderful New Year's to all of you. I wanted to wish you the best, and hopefully I'll see you as members. Do join me. You have my word. I work really hard for you guys, and I'm here all year long with live market training and teaching and answering your questions and giving you alerts and re-entries and where to exit and how to filter and scan for both day and swing trades in our markets. The neat thing about my room too is there's no scanners or special software needed. If you're watching this now, which you are obviously, unless you're watching this on YouTube, but as long as you can look at Zoom, like all of you who are, hundreds of you here live now are, you can learn with me in the live room. So no scanners required, no special software required, no BS, no dishonest front running, low float crap stocks. We like high volume, relatively consistent breakouts with good, strong price action. And I'll teach you, step by step what to look for each day. I want to make it easy and very clear and very something that's easy to follow. So anyway, I think that's it. Thank you for everybody for being here. Thanks, Silver. Appreciate it, man. Hey, thanks, Fred. Hey, Ian. Thanks, John. Thanks again. Well, thanks for all the kind words. I'm always scrolling by. Thanks, Fred. Hey, Bill. Yeah, I hope that next year is healthy and profitable for you folks too. So do take care and trade smart. I will see you guys. Wow, getting orders coming in already. Thanks. Be on the lookout for your login and password for the Zoom coming up this weekend. A reminder, capital markets are closed on Monday in observance of New Year's Day. So be safe out there, and I'll see you in the new year on Tuesday morning in the live room for all of you who have joined. And until then, do take care and trade smart. Best wishes. I really want us all to make better trades more often as the goal and get more consistent with it. And we have some really brilliant traders in the room, who help as well. So it's a good team effort. We got so many hundreds of people with eyes and ears, and also too, a quick tip in the room. Unlike some other places, I don't have chit chat of traders because I think that's distracting. You can ask me questions, and I personally answer every single question. And so you can ask me questions via chat like this, like what you see, but I keep it so it's focused on the charts, and we're focused on entries and exits. We're focused on the best moving breakouts each morning and gappers, and keep you on track for what's actually worth looking at. So thanks, everyone. Happy New Year. Take care, and I'll see you next time. I'm out. Bye for now. Trade smart, and let's go get them. Okay. Join now. It's a trade. Go to www.trademastery.com/holiday. Register for the year, and I'll see you on the other side, as they say. Happy New Year. Take care. And bye for now.